What is happening, YouTube? How are we doing today? We are going to be getting into two tickers. Very, very important video today. So I just want to say, make sure to slap the subscribe button because we are here every day, twice a day, 365. Ain't nobody doing it like we're doing it, guys. So make sure to slap the subscribe button and let's get into the freaking video, right? GameStop. GME. I'm going to be covering AMC afterwards, and I'll put the sticker, the thumbnail in there for you guys to click on and get your groove on, right? But GameStop, GME, seeing a pullback, unfortunately, I really believe that you would see that Thanos snap gap fill, and you did. You saw a very, very, very strong breakout. In fact, a gap up above this death cross. And it now looks like you're going back to retest previous resistance. So nothing wrong with this, guys. This is actually a very, very bullish sequence of price action that you'll see many times after a breakout is that throwback to resistance. And what's beautiful here is if you can find some kind of consolidation, you're going to see a golden cross retest here very, very soon. And that is probably the most bullish thing that could happen on this stock, seeing as the only other time that this happened was back here recently, right? We're talking the last year because that's what's most prevalent right now. But last time you had it was May 24th when you went up 173%, baby. And that's what we're looking to do again. I'm not saying you're going to see that exact call, right? You may not. You have resistance up here at $38, and then of course the gap fills. But this gap down here at 23.63 would be your worst case scenario, in my opinion, on GameStop. If you saw market sentiment dump, just like crypto is, right? If you saw the S&P 500 follow, you could see a knife below this previous resistance, not good, and then a gap fill of this gap, right? Sitting at I think 63, right? Yeah, 23.63. And then hopefully a V line, right? You want to see some kind of recovery, and ideally this you would bounce right here and then go. Or maybe it looks something like that, right? But regardless, I still think that this stock looks absolutely freaking amazing because you go to the weekly time frame. Now, the candlestick is my biggest ick about this chart. That is my biggest ick, is you see a shooting star candlestick here. I have it on my mat, but I will pull it up for you guys. Star candlestick pattern. And typically that is a topping candle. So what it would mean for the stock is you might see some kind of interim or local rejection, right? This is your picture perfect shooting star. It's a higher wick and then a lower close. Think of almost a reverse hammer candle, right? But for the bears, that is what a shooting star candle is. And oftentimes it comes at the tops of trends before you see a micro or macro reversal, depending on what time frame it is. So that is what we're rocking on GameStop. Granted, I want to say I have no idea what's going to happen tomorrow. But typically, when you see these shooting stars on low volume, typically they get eaten up like that. And we still have tomorrow. So your Friday close, I will be going over in depth to see where the stock looks to go in the future. Because the weekly close can be everything, guys, in evaluating your trading strategy for the next week. So often is it, right? But seeing the low volume, I mean, the prior weeks we had 96, 44, and 32 diminishing volume while going down, a typically bullish sign, especially during these retests, right? That is what you want to see. You want to see volume diminish as you continue to go down into significant support, because not only do you have your golden cross in the daily right here in the zone, you have this potential cross of the 9 over the 50. And so typically when this happens, you see dramatic moves, and that very similarly, if you watch my Neil video before this, not posted yet, but it will be, the 9 crossing the 50 acts as significant momentum changes. And it doesn't happen often on the weekly time frame, but when it does, guys, this stock is prone to move rapidly. You saw it back here in 2022, and you saw the stock top out. That is a shooting star candle. Top out here, and then absolutely capitulate from 47 to 15 in the matter of what? 5 months, right? That's disgusting. That's absolutely gnarly. No one wants to see that. And so now you have almost a reverse pattern right here, right? You're getting a low volume throwback into the cross up. Typically, these will print bullish, in my opinion, not financial advice. But let's go to the monthly here. Let's continue to cover the monthly. You still look like you have a massive breakout here on the monthly candle, 12% up from this doji candle that you saw mark the bottom on this bull flag pennant, and an increase in volume. So all checks out there, all looks good. You're still above the 9 EMA on the monthly time frame. And we're still looking for this 1, 2, 3, 4, 5, 6th tap along this uptrend resistance here. Break that and things begin to get really silly, but that is what we're looking for on GME. Let's get into, I haven't even checked out the 4-hour to be honest. But you do have the 4-hour 200-day EMA lagging, but coming right around that resistance point here. So maybe you see some kind of greater dip below and then V-line. And then V-line. Very possible, guys. So if I zoom out here, you can see on a local level how heavily this thing smacked you down here once, twice, and then you bounced off of it here as a bull or a bear flag before dumping further. So this is an important macro level, and I would expect some kind of bounce here, maybe even if it's a bear flag before a greater retrace into the gap fill. So that is my coverage on GameStop. On Webull, now let's get into trading view because I want to give you guys a little bit more perspective, right? Perspective on why this dump is occurring and what you could have done to see this coming. RSI divergences can be everything, and I can link below at some point the mat that I use to identify these because it has everything on there, and it's super trendy, it's super helpful, and it's awesome for my trading setup. But for your guys' knowledge, this had daily RSI divergence on GME, right? You made a lower low on the RSI. You could call it a double top if you like. You made a double top on the RSI and GME. Meanwhile, you made a higher high on GME's price, which inevitably led to a dump. Now, I'll show you another example of when you saw this. I believe it was back here. No, it was back here. You saw the height of GameStop, and potentially you could say back here, right? You saw a double top on the RSI here. Meanwhile, you made a higher high. Now, eventually it did lead to another touch of bearish divergence in the daily time frame, but you went from 34 all the way down to $20. That is something that nobody wants to hold through. And I'm not saying we're going to see that level of capitulation, right? But we could see that pullback from the top here to the throwback retest of 10%. So if you are a larger whale, right, you're trading with more liquidity, that every percent matters, right? And so if you can avoid that 10%, it's pretty tremendous to your P&L. So that's a little tidbit, a little knowledge drop for you guys. Hope you loved it. Now let's get into GameStop, right? Let's continue. So although you dropped below this band on the daily time frame, you are getting a retest at the very same time of that same level on the RSI, and it's come before the price. So watching what the RSI does tomorrow is going to be pretty key to potentially see the future here. If you see a bounce off of this previous resistance acting as previous support, you may anticipate that price would come down on low volume and then see a wicked bounce, or at least some kind of further consolidation to form another pattern, right? Very, very possible. Not a great candle close today. Let's not look at that or talk about it. You are coming up to your weekly time frame. Like we said, shooting star on the weekly time frame doesn't look great. You could come back and retest this weekly RSI band before maybe seeing some kind of squeeze-like movement. I'm trying to see if the stock does that often, but it really doesn't. Typically, when you cross it, you run. I guess you did it here, but you made a double top. So you broke it. You ran 44% in 1 week. You consolidated, and then you tested it, and then you went again. But it wasn't really good for the stock. So, yeah, I wouldn't refer to that. I think we're in a much more bullish sentiment market right now. But the monthly time frame, you are looking to get your first cross of the monthly RSI band since back here and back here, which respectively were 72% moves and marked the bottom, mind you, and over 500% moves. And I'm leaning a little bit more towards this more dramatic move because typically the breakout of these bull pennants, you take the flagpole and you stick it on top of the breakout. Whoops, I just messed up my trend line there. And typically that'll give you your price about 102, potentially 73. Between that range is where I would expect this stock to top out if you see a break and further run of $30 to $40 zone. It's going to be really important, guys, and I'll continue covering the stock so you guys can see what it's doing at these important levels, so that we can see how high can this thing go. How much fuel do the rocket thrusters have on this baby? And we'll really just take it day by day, because sometimes that's all you can do on this stock, especially when you're in these breakouts. You have to watch for those divergences and for those potential topping trend lines. So, GME in a nutshell, you're still bullish. There's no reason to freak out now. You've still crossed the quarterly RSI band for the first time since the 2020 squeeze, right? That's a tremendous thing. You go into the monthly time frame, you're still green on your monthly MACD, although closer. You're literally on the cusp of breaking out or breaking down on that thing. So I would prefer to break out. That is my preference. I would rather not see any kind of move down to $10. I'll pass on that one. I'm good on that. Your quarterly time frame, you are beginning to curl up for the first time since 2020. You almost got the cross right there. You got a fake out, but now you're beginning to curl up once more for the first time since 2020, and that is inherently a bullish thing. You see the entire risk on assets market kind of set up very similarly, right? You see Neo stock, exact same position with the RS or the MACD on the quarterly time frame. You see AMC. You see stocks like BlackBerry and Cost as well. So I think once these things do run and they get their move, they're going to run together, because that is what history says. But even if you zoom in here on the quarterly time frame, it tells you how important of a level that this 25 to 2450 zone is, right? You look at this trend line at 2480 and you can see how often you close either beneath or you close above, and you wick off of it so frequently. You wicked off of it, you wicked off of it, you wicked off of it, closed right below, or right above. Wicked off of it, closed right below. Wicked off of it, wicked off of it, wicked off of it. Literally, I mean literally closed right below. Wicked off of it. This was probably one of the first candles where you closed above, and then you came right back down and you closed below, and then now you're looking to do something very special in which you can break above this and close above for the first time since December 31st. And of course, back here when you had this astronomically large candle I mean, I'm just going to extend this thing and it takes up the entire screen. I mean, that's a joke, right? That shouldn't happen, but it did happen. And I remember it fondly. Oh, what a time. What a time. What a place. What a time. What a place. Let's get into our girl. Let's get into Amy. AMC, baby. AMC is in a very, very interesting spot on the charts, regardless of whether it's above $3 or below. You can see on the quarterly chart here, you are still looking to get this cross up on the quarterly MACD. And that would be the first time you've done so since 2020 when you saw a 500 or 400% candle and a 455% candle respectively, right? But what's going to matter here is just last time I covered the stock, you were crossing this thing and you were closing it green. So you want to see a consecutive candle close on the quarterly chart, and you have until November to do so. If you close this thing red on increased volume, I would be a little biased to say you may see further downside. I'd like to see a close above 290 because you can see on the top left part of your screen, the O, that is when you open the stock on the quarterly time frame. That is also what you need to close above to make it a green candle and close below to make it a red, right? And we have so many lines in this chart on the quarterly time frame, but you can see here that you're in this macro, either symmetrical triangle or wedge. Typically, symmetrical triangles are bearish, but they can break up. We saw that on GameStop, right? Or Neo. And within this symmetrical triangle, you're forming this kind of double bottom formation in which you have 1, 2, and you could form some kind of triple bottom here, but I'd like to keep it as a double bottom because they're clean, right? You did have a good example here where you had 1, 2, double bottom accumulative formation until you squoze. And I'm not saying that you're going to see price levels up here, right? But you may see a percentage return that is comparable. Because if you break these things, typically when you break them, you do so with power and with volume on this stock. This is driving me crazy. There we go. Typically when you do so, you break them with power and volume. Up to this midline is 100% at 550. We'll talk about that in a second and the importance of it. Up to the first gap fill at 13 is 385%. The third gap fill, or second gap fill, excuse me, is $19, 600%. And then the third and final gap fill on AMC's price, 1,500% at $43. Now, it may not happen in a straight V line like this, right? But I do anticipate that you'll see some kind of drawn out U-shaped accumulative structure here. And I say that because there's a lot of positive fundamental news coming on AMC's chart, along with all the meme basket, right? You have a rate cut. It's a perfect environment for something like this to happen. Very similar to when rates were cut down here. Boing. We're now looking for a boing. Beyond that, you also have a bullish divergence on the quarterly. On the quarterly MACD. Come on, look at it. Can you see it? It is a higher low on the MACD here as you're beginning to cross up, but a lower low in price. That is inherently bullish. We're going to get into the monthly MACD or the monthly time frame. You can see you are still closing a green candle, albeit smaller wicks. This gives you a better perspective of the wedge or symmetrical triangle that you are in and a way better picture of this macro double bottom, right? See, macro double bottom potentially. I say potentially, I'll show you why in a little bit. But before that, we're going to go over the Bollinger Bands expanding for the first time since back here in August of 2023. Now, think of the Bollinger Bands as a restricted rubber band. You are stretching, and then eventually it snaps, guys. John Bollinger created this indicator to go over extended periods of sideways price action, right? When prices are so coiled or so constricted, eventually they come to a point when they move very volatile. And this indicator helps identify those moves in which you're actually beginning to see this thing either wants to break down or break up. You will see volume, significant volume, and price action step in here on AMC within the next couple of months. And the Bollinger Bands tell you why. They tell you the reason, right? This is the tightest they've been on the monthly time frame since back here. The move that happened following that, although inherently bearish, right? When you got that expansion of the bands, you moved 81% down. Bands continue to expand. You tested the mid-band, came back down, and then you expanded them to the north side. And that was an even more stupid gain. This is absurd. This is what got me into YouTube. This is what got me covering the stock market for y'all. Is I saw how tight these Bollinger Bands were on the monthly time frame, and something has to give. Something has to break here. I'm convinced of it. So I will continue to cover this as it develops. The weekly time frame, you've seen a rejection of this top side resistance, and you are now looking to see a retest of this falling wedge down sloping support at around 270. Breaking 270, get that out of here. Breaking 270 takes you, oh my goodness, get out of here. Takes you down potentially, and let's get rid of the Bollinger Band so it's easier to see, potentially takes you back to this triple bottom at 250. And I have it. Do I have it? I should have it. Triple bottom pattern is what you could play out on the AMC macro. Instead of some kind of double bottom, you could play out a triple bottom in which you bounce over and over off the neckline, eventually breaking it, testing the neckline, and running. You could see something like that on AMC stock. That's GameStop. There we go, AMC. So 1, 2, 3. You would have to break $5 or potentially this 360 zone and then retest and then go. That would be your macro bottom. So let's get into the daily time frame here. And the daily time frame, you can see a breakdown of this uptrend, which is never good. I don't like to see that, right? But you've seen a breakdown of this trend, a loss of the 50-day EMA, which would insinuate to me that you're going to the bottom here at 271 or 272. You've seen an increase in bullish or bearish volume, which to me means you're going to see that move, right? And that might be an excellent location to add shares if you're looking for this longer term accumulation. Like we said, break this downside or down sloping support and you see resistance at 250. Not financial advice. I do still think that this thing is going to absolutely annihilate people in the next coming quarter because you have things like Taylor Swift, you have things like debt reduction, you have things like positive earnings for the first time in quite some time, a positive EBITDA, right? A lot of things developing like lower costs and higher top line sales that eventually lead to profit. Very similar to GME, right? Restricting your books. So our macro thesis on AMC is you have to get above the 50-day EMA at 292 and hold it, guys. That is the most important part because you did it here, you flagged out, you broke down. You have to hold this indicator because if you hold it and you bounce, not only are you breaking your falling wedge, you're breaking the macro symmetrical triangle. You're breaking that, and then now you have free room. You have free room to go to the 200-day EMA with volume, right? With intensity. Because every time you've tested this thing, you've done so on immense volume. You tested it here. You tested it back here perfectly on crazy volume. You tested it here, you tested it there, you tested it everywhere, you tested it here, broke above, failed, broke above, failed. Test, rejection, right? What we are looking for on AMC stock and what could mark a perfect entry, right? If you're waiting until it flips bullish, you could wait for this macro move and retracement. After retracing into the golden cross, because this is the last time you had what we were talking about on GameStop, right? A golden cross. You retested it, right? And then you consolidated into a game of squeeze to $400. You have not seen another daily golden cross since February 1st of 2021. You have the unique opportunity, if you can hold the 200 or the 50-day EMA and test the 200, of another golden cross. First time in 5 years, guys. That is a special thing. I don't care what you say, that will have been the biggest chart development on this stock in over 5 years. Because throughout this entire thing, this entire history of the stock, lawsuit, dilution, ape, nothing mattered more than this death cross confirming this breakdown and this golden cross confirming this breakout. Because when these things happen, you gain the attention of institutions, hedge funds, and traders, day traders. So important for the stock. If you're going to seek higher prices, that you get the daily golden cross, the quarterly MACD cross, and then that you continue to increase the box office and have good quarter after quarter growth in revenue. And so we'll have to see on AMC. It is quite literally a waiting game until at least mid-October. And if you break this, to beginning of November. And that's why I say it's a next quarter game. You can see some explosive prices next quarter. But I think until then, it is an accumulation game. And maybe you V-line out of here and you break now, but I'm here for it. I'm going to be covering literally every single day because this has been my thesis. It'll be my thesis. And until I'm proven wrong, I will continue to cover this. So thank each and every single one of you guys. We crossed 600 subscribers just yesterday, and we are already building steam and momentum to 700. So if you guys liked the video, if you liked me or my content or my explanations to technical analysis, please slap the subscribe button, join the team, and tune in for the next video, guys. God bless each and every single one of you guys. Thank you for all the love and support, and I will see you in the next video. Peace.